unacceptable levels of inflation.
Price inflation in the USA continues to come in at record high levels. This week's 8.6% consumer price inflation data point is not only underreporting price escalation facts in the real world as costs continually seem to rise, but it's also already at a level that the nation has not seen since the last time gold manically revalued upwards to a spot price so big at the time the USA could have gone back on a quasi-gold standard had it so chosen.
I do expect inflation to remain high, although I very much hope that it will be coming down now.
This week, the current head of US Treasury's policy on raging price inflation has apparently now been publicly reduced to hopium, which one might define as an irrational or unwarranted optimism that things might change sooner rather than later with regards to raging price inflation escalations.
We're seeing high inflation in almost all developed countries around the world.
Janet Yellen was correct with that statement. Seemingly all fiat currencies around the world are increasingly losing value versus goods, services, and items of real value. But we're going to kick off this week's SD Bullion market update by remaining focused on the USA and its growing price inflation problems, as the United States is where our bullion buying customer base lives and the majority of our viewing audience also resides. Instead of just burying our head in the sand, we're going to take a hard look at some damning data and charts to get a better understanding of where things are and also where they may be going. Price escalations for basic things like food to eat in your home or gasoline to get to work and travel, they've all exploded in price in the last year and a half. And even if this chart went back to the 1970s, I highly doubt we would see price escalations of this size year over year in basic food staples and fuel costs rising. I can make that statement rather confidently, for we have U.S. consumer sentiment data that goes all the way back to 1952. We've never been this low before. Gallup poll data also illustrates that U.S. consumers, who drive about 70% of the nation's economic output, are extremely concerned about escalating price inflation. Generally, most U.S. workers' wages are not keeping up with inflation, and we can see that having its effect with a plummeting personal savings rate, as well as ramping credit card debts in a seemingly desperate attempt to make up for household budget gaps and to make ends meet. If recession is not here yet, it can't be too far from around the corner. We might want to stop listening to those who have historically proven themselves to be both inaccurate and misleading, especially in lifelong proclamations. Hello there, on behalf of SDBullion.com, this is James Anderson with a quick SD Bullion market update. Before we go further, please smash the like button so other sound money stackers can also see this content. And be sure to subscribe to our SD Bullion channel so you can get our latest market coverages and also a chance at winning incredible bullion giveaways like this one.
Get ready for SD Bullion's Monster Box sweepstakes that includes 500 Silver Eagles. You could be the next lucky recipient of a phone call like this.
This is Dr. Tyler Wall, CEO of SD Bullion. Well, I'm calling you to let you know that you won the SD Bullion giveaway of a Monster Box of Silver Eagles.
So click the link below for your chance to win.
Click the link below to enter our new 500-ounce American Silver Eagle coin Type 2 giveaway contest. And good luck to all of you who take part. The silver and gold markets closed this week's trading somewhat strongly, particularly in gold. The gold-silver ratio thus climbed to 85. And while the silver spot price continues languishing along sideways in the low 20s per ounce price consolidation, the most encouraging move this week was gold's response to this latest ridiculous price inflation data ramp. Perhaps early next week, we'll see some follow-through and a run towards 1900 an ounce. In a secular bullion bull market, when nearing a potential mania phase revaluation price climb higher, studied bullion bulls typically want to see gold lead, and only later enjoy the typical outperformance the silver price later contributes, as average investors swarm into physical precious stores of value. You can see how that played out in the 2009 to 2011 price runs for silver and gold respectively. We now have a massive base building for the next exponential bullion price climbs to come. In terms of not storing value well of late, These still near universal institutional big money investors, 60% stock and 40% bond portfolio allocations, continue to get its teeth kicked in thus far in 2022. Either they change their investment paradigms and outlooks and portfolio allocations, or they will likely continue losing big time in real value terms to come. The next major move for the monetary precious metals is likely when large institutional investors and momentum swing traders finally return into the precious metals markets in all forms, from highly leveraged derivatives to major increases in physical bullion demand to come. Central banks are not waiting around. Recently, 1 in 4, or 25% central banks surveyed, stated they plan to increase their official gold reserves in 2022. That is up from only 8% in a somewhat recent 2019 central bank gold interest survey. Bloomberg writes, central banks see gold as a reserve asset and will likely increase their holdings of the metal in the next 12 months, according to a survey by the World Gold Council. That's mainly due to increasing concerns about a possible global financial crisis, with central banks in emerging market and developing economies, or about a quarter of survey respondents, intending to add more bullion to their reserves. Anticipated changes in the international monetary system and concerns over raising economic risks in reserve currency economies are also major factors, the survey said. Add to that rising inflation, monetary tightening, and Russia's war in Ukraine further disrupting supply chains and bringing geopolitical uncertainties. Quote, the geopolitical situations are much more volatile, and we don't know how much longer this situation will persist, said Shikoa Fan, global head of central banks at WGC in an interview. Quote, what has happened is gold has proven its safe haven characteristics during that situation. That's one aspect that central banks are considering. Emerging markets central banks are optimistic about gold's future in the international monetary system, and they're on the fence about the US dollar, said Fan. The survey also showed a majority of such respondents expect gold to grow in proportion in total reserves over the coming years, with its attributes as a safe haven store of value and ability to perform during times of crisis remaining influential. Following up on a popular video released in late April of this year, 2022, more concerning news reports continue pouring out of the base metals price discovery markets, particularly in consistently scandalous aluminum market. In a foreshadowing of the coming commotion in gold and silver price discovery markets using outsized leverage with unknowable, unsecured bullion supply levels supposedly warehoused and commingled amongst too many naive parties, apparently base metals traders in China are losing confidence in varying base metal supplies that are alleged to not even exist at all. Bloomberg writes, traders are rushing to check that the metal they hold in Chinese warehouses really exists, as allegations of irregular financing trigger a widespread loss of confidence in the world's largest aluminum market. Global commodities powerhouses Glencore and Trafigura Group are among traders checking their aluminum inventories after several domestic trading firms claimed last week they were duped in providing loans against artificially inflated stockpiles, said people familiar with the matter. At least 3 metals warehouses in China have also suspended operations while they account for their inventories. A separate company, Wuzhou Guolang Logistics, which owns a major warehouse in the eastern province of Jiangsu, told clients that it recently completed checks for 24 companies, according to the people, who asked not to be identified as the information is private. Glencore and Trafigura were among them, as well as trading units of top Chinese aluminum smelters, the people said. All of the traders were able to locate their inventories in the warehouse, Wuzhou Guolang told its clients, according to the people. Calls to the company, which is state-owned and approved by the Shanghai Futures Exchange to hold commodities against futures contracts, and its parent, Guolang Group, weren't answered. Trafigura didn't have any exposure to the allegedly fraudulent transactions, but has been affected because it has a small amount of metal in one of the warehouses that has halted business, said one person familiar with the matter. Trafigura and Glencore declined to comment. The Shanghai Futures Exchange didn't immediately respond to a request for comment. Last week's allegations, which are focused on a facility in the city of Foshan in southern Guangdong province, has spooked Chinese metals markets, which rely on warehouse receipts to prove ownership. Several traders have alleged they lent a total of more than 500 million yuan, 75 million fiat Fed notes, against stockpiles of the metal stored in Guangdong warehouse, but then found the inventories were worth significantly less than that. Some Chinese traders have started moving inventories to warehouses they believe are less risky, according to the people. In addition, CMST Development Co., a logistics firm listed in Shanghai, sought to put distance between its operations and the allegations that are roiling the industry. The state-owned company issued a statement to the exchange saying it isn't involved in the Vashon incident, although it's helping clients transfer the goods to its facilities. In my longer-term view, each week that passes, we move closer to an era where global precious metals price discovery markets get called into real question in large public forums for trillions upon trillions of wealth-transferring reasons. For most of the world, by that time, it will be too late to secure bullion in large size at any price premiums reasonably close to spot, delivered within reasonable time frames. I strongly continue suggesting you get prudently positioned outright with bullion in hand, and potentially also with proven dependable counterparties who you can trust to help secure a foundation of precious metals wealth along the way. From here to there, things are only likely to become more unprecedented and volatile in nature. That's all for this week. As always, to you out there, take good care of yourselves, those you love.
If you enjoyed this content, be sure to give our video a thumbs up. To keep getting bullion-related news and industry insights, be sure to subscribe to our channel. Finally, hit that alert button so you know when we publish fresh content.